I see Jake smiling over there. Jake, why are you smiling?
Well, I think what it all comes down to is you're responsible at the end of the day. So you're responsible for hiring a good CPA, but then you're also responsible for understanding enough of this to make sure you're getting max benefit, max value. Hello, everybody. This is Jake Senziano, host of Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, chef, father, six, a best-selling author, the G-Daddy, Gino Barbo. Gino, how's it going?
Mr. Stenziano, doing good, bro. How you doing?
Always making it happen, big man. We got some things in the hopper this week, Mr. G. What you working on?
First thing, before we talk about what we got in the hopper, I just want to, give a big shout out to everyone listening to the show. We know that everyone's busy. There's tons of podcasts you can be listening to. I want to thank everyone personally for taking the time to listen to Jake and I. That's why we're here trying to create a ton of value. We've got great guests. The guest today is going to provide a ton of value, year-end financial planning, CPA stuff. So I just want to thank it out. Thanks for doing it.
Take it out, hug it out, right?
And I know J Daddy's going to bring the pain today. So
always bring the pain. You got some interesting things going on right now. You got the 10-year down. You got hysteria in the media or the economy. Maybe we'll get a few more refis going here. We'll see what happens. But that's what I'm thinking about. So
Jake, I agree. So let's talk about real quick what's going on. I want everyone to get off the when you guys listen to the news, just shut the news off because it's such a bunch of crap. You can't control that, right? We talk about limiting beliefs a lot. Let's get away from that. Start the new year with a little bit of diet, with a little bit of media diet. Turn the TV off. I'm doing that right now. I feel great. We're going to talk about Thomas today. He's up in New York. Feel sorry for him. I'm going to pull him down here. I'm going to pull him down here to Florida, right? That's what's happening. The mass exodus. We just read an article, Jake. What was the article about? 100 people per day fleeing from California and New York. It hasn't happened, and it's happening right now as we speak. That's what you'd be focusing on, that type of media. So.
G-Dad saying, look at the economic news.
That's
so,
right.
Guys, today's guest is Thomas Castelli. Thomas is a real estate CPA, and he's here to expand our minds on how powerful multifamily investing can be from a tax perspective. He's an active multifamily investor and tax strategist at the Real Estate CPA. So, without further ado, Thomas, welcome to the show.
Thanks for having me on, guys. It's an honor.
So give us a little bit about your background. We're sitting here, you're New York, you're talking about going to Florida, you're buying multifamily buildings, you're in the tax game. Give us a little bit about your background and what you're doing right now.
Absolutely. So I grew up on Long Island, New York, in the suburbs, and I went to college. Everybody in my circle of influence at the time, professors, teachers, parents, basically convinced me college was the way to go. So I went to college for accounting and business management. And during about my sophomore year, I started getting into the entire wealth building books, that type of thing. The Richest Man in Babylon, Rich Dad Poor Dad, and that eventually led to an interest in real estate. So I went to a seminar, 3-day multifamily seminar in real estate investing, where I met my mentor. And at that seminar, I pretty much realized that real estate had pretty much all the different aspects of business that I enjoyed, that I was interested in. Decided that was where I wanted to focus my career. So I made a few investments with my mentor, and they were limited partner investments, and eventually worked my way up and started and basically participated in the syndication of an 82-unit apartment complex in Jacksonville, Florida, believe it or not. And then around that same time when we closed that deal, I came across the Real Estate CPA and saw it as like the perfect blend between my passion for real estate investing and my basically my accounting background.
So let's talk about the tax implications of what's going on in New York and why people like you and me want to leave or have left New York and gone to, I guess, sunnier pastures, other than the weather. Because weather's one of those factors where, New York can't control, but it can control its tax and it can control other factors. So what do you see going on?
Yeah, one of the biggest things there now with the new Tax Cuts and Jobs Act, there is a cap, a $10,000 cap on state, local, and property tax. So, New York has not the highest state tax, but it's around 6.79%, I think it is right now. And when you add to the very high property taxes that you could find throughout New York, it makes it very difficult for people who have these properties to to be able to write off as much as they could in the past, and it's driving people out. So someone who may have been writing off, $20,000, $30,000 in state and local and property tax are now only are capped at 10,000. So that definitely puts a burden on on people living here in New York.
So I'm going to give you my example. I was proactive because I just got lucky. My property taxes in New York, everybody, wait for it, $28,000. That's what I was paying in property taxes. And my partner over there calls it theft. I call it something different. You want to pay for school and you want to have a decent, public school system. But I homeschool the kids, so I moved down to Florida. My house is 40% more. It's worth 40% more. My taxes are $12,500. So I basically got a $15,000 reduction in taxes. I'm 300 feet from the beach. I've got no state income tax. And basically, I can write it all off. As far as New York, like you said, the first 10, I can write off the remainder. So people are saying, well, college is going to be free in New York. Well, if my son's college tuition down here is 15 grand a year, I just paid that with savings in property taxes. So if I figure that out, I feel sorry for the average New Yorker who says, you know what, I can pick up, leave my job and go to New York and go to Florida from New York or go to Tennessee from New York. They really have to watch out what they're doing. New York is not the Mecca that it used to be because you don't need to be on Wall Street right now. You can go anywhere. So I'm just telling people right now, the writing has been on the wall for a couple of years and it's only going to velocitize. Because once things start to happen, just like the student debt back in 2009, in the last 8 years, student debt has doubled. Once things start moving, there's just a velocity to it. And as you see, 100 people per day. And there's so many wonderful places to go. Nashville, Tennessee is another one where they have such an influx of people. People think the South was backwards and all, but there's so many wonderful places. Charleston, you have Savannah, you have so many wonderful cities down here that it's not what it was 30 and 40 years ago. There's everyone moving down here. So I want people just to be aware of that, aware of their situation, and just do the pros and cons. The pros for me was, all the savings. The cons was obviously you're leaving something you're comfortable with, you're leaving your family, but then after a while, your family members start coming down, and I think Jake's starting to do that, and I'm starting to do that. We're starting to recruit, right, Mrs.
Listen, I'm telling you right now, he's full of it. He wants to wear the pastel colors and feel the Florida vibe and get the warm weather. That's what it's all about, man. I'm telling you.
Yeah.
I see it every day.
How you like the colors, huh? So let me ask you, Thomas, what are the qualities of a good tax preparer?
Yeah, so good tax preparer, obviously, first and foremost, is timely and accurate tax filings. The second big one is a good tax preparer would do more than just prepare your tax returns. They're going to provide proactive tax strategy and planning throughout the year rather than just at that time when you file your taxes, because that's where the real tax savings comes from when you're doing stuff proactively. At the end of the year, once 12/31 comes around, everything's pretty much set in stone. What is done. Whatever activities you did, those results are going to be reported. But when you're actually changing those behaviors, changing those activities throughout the year, that's when you actually see those results. So the second biggest thing is going to be proactive tax strategy and planning. And I'd say the third thing is they have experience working in your industry or niche, in this case, real estate, because, there's a CPA is not always just a CPA. A lot of CPAs are generalists. So they'll have their hands in a little bit of manufacturing, a little bit of small business, construction, online businesses. But when someone really dives down deep into one niche and really understands that niche, that's how they can be able to pull those strategies and identify things that a generalist necessarily couldn't.
So what kind of red flags do you see when you see a tax preparer who you don't like?
Mainly like little things. Like, for instance, in real estate, like we see tax preparers, someone who could have qualified for the real estate professional status, which is saving a significant amount of money, just simply didn't recommend that to their client. Also, we see sometimes just stuff missing on the Schedule E of the tax return, like insurance expense just gone, the depreciation isn't there or isn't right. Little things like that. You just see these little things that can save people money that just aren't recommended to the client, and you could tell it's because the CPA probably just doesn't know, doesn't have the time, or just doesn't care. So it's.
Yeah, I like that. But is that because the CPA doesn't know, or a lot of them are trained to say, hey, listen, I don't want to take too many deductions, or I don't want to be too aggressive because my clients might get audited. I hear that from a lot of CPAs, a lot of professionals. Do you run across that a lot?
There's definitely a lot of conservative CPAs out there who are a little bit maybe too conservative at the end of the day. And that I think might have to do with not knowing the laws as well as they should, because then you'd be able to see the ways to get around that in the event of an audit. But there's this gray area that some CPAs don't like to play in. But in order to really maximize your tax savings, to the full extent that you can through the law, you're going to have to play in that gray area, and some CPAs just aren't comfortable with it. So I guess you'd say a good CPA is going to be aware of these pitfalls and strategies to work around them. Should you do get audited, what's the best way to substantiate your position so that you're not going to have to recapture any of the tax benefits that you previously took.
Could you give me a couple of questions if I'm coming in to interview you as my CPA? What questions would someone like myself ask you to qualify you?
Yeah, absolutely. So, I think the first one would be, do you work with real estate clients? Do you have clients who invest in real estate, or do you invest in real estate yourself? Then also, what type of real estate do you invest in, or your clients invest in? Because that's really going to help you get a clear picture of whether or not they can help you in your specific niche. If you're doing multifamily, but your tax accountant only has experience helping people doing fix and flips, you might run into some issues there. Also, a question you want to ask is, based on my current situation, what tax strategies do you see that would be able to reduce my current taxes? Also, how often can we meet to discuss tax strategy planning? Again, a lot of times the people, they only meet once a year at around the time you file taxes, and there's not really much you can do to save taxes at that point. So what are the expectations around filing tax returns? When should you be uploading files? When should you be submitting files to them? When will they be filing your tax return? Because, a lot of times people get surprised when they have to extend a tax return. There's nothing wrong with extending, but sometimes people are surprised by it. So just something to ask ahead of time. What kind of accounting software do you use? At the end of the day, will the accounting software that you are using as a client going to match up with what your accountant is using? Do they have experience using your kind of accounting software? Of course, what costs are associated with your services? Always good to know that up front, so you're not going in and getting blindsided by a big bill or something along those lines. Will the same people be servicing your account year in and year out? At the end of the day, you want to build a relationship with one person or a team of people who are really going to understand and care about your situation, rather than be working with a different person every year. Also, how do you handle cost segregation studies, 1031 exchanges, opportunity funds? What are your stances on these certain topics? How aggressive do you get? Are you willing to play in the gray area, or do you like to keep it safe? Can you provide testimonials and or references from your current clients? That's really where you find out how the CPA is performing with clients that are like you. I guess the last one would be, do you have referrals to complementary service providers, maybe an attorney, a property manager, people in the industry that you're also working in?
I like those questions. I think one of the questions that I would ask, I've just been thinking about it, is the tax code is over 70,000 pages, correct? And I know my accountant goes to countless hours of continuing education. Wouldn't you ask him, what kind of continuing education are you currently doing? Are you up on the tax code? I think that's something that, you want to know if your accountant is just doing that, staying up to date, or is he just, basically just flying by the seat of his pants, correct?
Oh yeah, no, absolutely. That's a great question.
So let me ask you, why do you favor real estate as an investment vehicle?
Yeah, so I mean, there's a lot of reasons, but one of them is there's multiple profit centers. You have the appreciation portion of it. You have the principal pay down when you're paying down the mortgage, you're building up the equity. Then you have the cash flow portion, and also the tax benefits are also in a way a profit center because it helps you save money in taxes. The money you're not paying in taxes in a way is a profit. So there's also control. So, if you're investing directly, you have the ability to force appreciation, especially in multifamily, by raising the NOI. And then if you're investing as a passive investor, usually you have direct access to the person who's managing your investment. And you're not going to get that when you invest in Apple, when you invest in Amazon. Good luck going to the proxy meetings, trying to sit there, raise your hand, get any attention, right? Then the stability is also I think I look at it as less volatile. It's more stable than paper assets because it doesn't move directly in line with the financial markets. It takes more time to sell a property than it does to click a button on the mouse. It's also a tangible asset. I mean, I'm looking outside my window right now. It's a big building right there. There's something about it that just it's something, I don't know. It's tangible, but it's in an intangible feeling it gives you. It's like there's worth there. It's something real. People are always going to need a place to live. That's never going to change. And real estate isn't going anywhere. There's a lot of shifts in technology. There's in the technology industry, the pharmaceutical industry, all these industries are constantly changing. And yeah, while tech is definitely impacting real estate, the core fundamentals of real estate aren't going anywhere, probably in any of our lifetimes, probably well beyond that as well.
So can we dive into the benefits of being a real estate professional, what that designation is, and then maybe piggyback that off with a little bit of cost segregation?
Absolutely. So the real estate professional status is when basically what it allows you to do, it allows you to take your passive losses against your active ordinary income. And to qualify as the real estate professional, you have to work at least 750 hours in a real estate trader business, and you have to work more than half of your total working time in a real estate trader business. And that's how you qualify the real estate professional. To take that a step further, then, to take the passive losses on the properties, you actually have to have material participation. There's 7 different tests. The biggest one is usually spending 500 hours or more in the activity. And when you're a real estate professional, you can group multiple properties together. So if you have 10 rental properties, or you have 1 multifamily building or 2 multifamily buildings, you group that stuff together, and then you only have to qualify 500 hours across them. And then, with depreciation, you can use a cost segregation study to break down the components of your property into 5, 7, and 15-year property, and 27.5 years as well. And generally, anywhere between 20 and 30% of your property can be broken down to that 5 to 15-year mark. So say you have a property worth $1 million and you could take 20% of it, $200,000. That's going to be the increased depreciation. And then when you add on the 100% bonus depreciation, so with the Tax Cuts and Jobs Act, they added any property with a useful life of 20 years or less can be 100% depreciated in that first year you place that property in service. So if you buy that $1 million building and you go ahead and do the cost segregation study, and $200,000 is considered that 5, 7, or 15-year property, you're able to take that $200,000 deduction in that year. So if you're making a substantial amount of money, it's a $200,000 deduction right off the top of your income. So that's really the power of the real estate professional status.
I see Jake smiling over there. Jake, why are you smiling?
Well, I think what it all comes down to is you're responsible at the end of the day. So you're responsible for hiring a good CPA, but then you're also responsible for understanding enough of this to make sure you're getting max benefit, max value. And that's why I think, shows such as this and having Thomas on explaining this make folks aware of, hey, these are 5 things you got to know, right? You got to be aware of cost seg. You got to be aware of being, a real estate professional, and then finding ways to convert those with the right team in place. That's what I'm hearing, because look, I'm not going to understand 70,000 pages of a tax code, let alone one, but I know how to hire and partner with the right folks, and then know the important things to make sure that things are done right. I was joking with Gino the other day. Part of the reason I was laughing is because I was going through the old notes, and we're getting brokers now sending us things based on tax adjusted returns, and I'm like, dude, what are these guys sending us now? Like, and so they're basically saying, like, after your tax benefit's been applied, this is what the return looks like. And it's like, guys, let's just be upfront with one another and say the return sucks. If you want to buy it, go ahead. Like, it's not. Don't give us a shit. But anyways, that's where I'm at. That's why I'm smiling. I'm just enjoying you guys, company right now. So
and to piggyback off of that, I think that's one of the reasons why multifamily has been hot for the last couple of years, and I think it will remain. I don't want to say hot, but you can see that if you're a doctor making $700,000 a year and you can get a huge bonus depreciation and partner up with someone like Jake and do that work and do a cost segregation study, well, maybe your cap rate is a 4, but then all of a sudden you're wiping off $200,000 of your.
Yeah, but you're partnering with me, so you ain't buying a 4 cap. All right.
It's my boy. Yeah, you're partnering with 7 cap, so you're really killing it for all you.
Yeah.
You see my point?
This, man. I mean, some money, right?
The power of that is unbelievable. And all you doctors out there, you don't have to do this yourself. We've bought from doctors before. We've bought from attorneys before. This is not a business where you need to do it. You do it yourself. Find people to partner with. There's a lot of people in the Jake and Gino community who can do day-to-day management. Hand over your funds to them, partner with them, give them some equity, and the returns you will get just from the tax adjusted basis, just from doing cost segregation, and just from doing, even 1031s or whatever your strategy is, would be amazing. So just putting it out there. That's why multifamily has been hot, and I think it's where it'll continue to stay, really positive as far as things go towards the future.
Gino, I know a lot of the listeners are wanting to take their multifamily investing business to the next level. I know you've been hard at work helping Jake and Gino students do just that using our framework. G-Dad, explain to the listeners how they can get our help.
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group of investors. What we're looking for is those that want to follow our proprietary framework we've created: buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of this amazing community, apply to work with us at jakeandgino.com/apply.
Now, Thomas, I had a question from Jake and Gino students, John and Aaron. They asked about LLCs. Do you recommend creating LLCs for your investment properties?
Yeah, typically we recommend creating an LLC, but it's important to understand that from a tax perspective, an LLC, for the most part, if you're going to have a single member LLC or you're going to be a partnership, it's ultimately going to pass down through to you. So the real power in the LLC is for asset protection. So whenever you're going to create an LLC, definitely want to run that by an attorney real quick, see if that LLC is the best structure for you, because there definitely are more complicated structures out there that do provide more asset protection, which is the primary purpose of the LLC. But in general, we do recommend putting stuff in an LLC. It is a basic asset protection vehicle.
Do you have your stuff in LLCs?
Yes.
So the answer to that would be
yes.
No, Gino, it's like cost seg, man. You get to a certain number and it makes sense, and it's based on your net worth, right? So if you're really concerned if the number is $750,000 and you can do a cost seg at that point, maybe that's the strike point for an LLC too. If the building's worth that much, or maybe it's $1 million. I don't know. Whatever it is, but I think it has value too. What are you trying to protect? How much?
That's right. I've got to ask this question because I've got 6 kids. How do you use kids as tax benefits? How can you get some savings from your children?
Okay, so yeah, I think for most people, it's going to be paying your children through your business. So if your child's under the age of 18 and you can pay them through a business that's solely owned by you or your wife, or your spouse rather, you're going to be able to pay them up to $12,000 per year. And they're not going to have to pay any taxes. So they're not going to have to file a federal tax return, and you're going to receive a deduction in your business. And so you're going to be able to see that deduction at the same time. You're going to be able to save for your child's future, because now that they have earned income, now you're paying them through your business, they have earned income, and they can go and open up a Roth IRA. And they can use that Roth IRA to invest in, they can self-direct it if they want, invest in real estate, they can invest in an index fund if they want, and they can take the contributions out at any time. So it's not really tax savings for the parent, but I mean, it definitely is a powerful strategy to save for them while at the same time giving you a tax deduction.
So I like that. What I would have the kids do at a certain age is open up a whole life policy. Open up a whole life policy when they're really young. Get a death benefit on that thing. Put the money in there. I'm not a huge proponent of IRAs and Roth, because I don't like when the government decides to create these plans, because they can change the plans anytime they want. So, I mean, it's a strategy that I know that super wealthy do. They'll open up whole lives, and that's one way for the children to create and grow that cash, that cash in the policy itself. And after certain years, they can borrow the money out, they can pull the money out, and you can use it as collateral. But when they're really young, you can actually start when they're young, so the premiums will be lower, and they'll always have a death benefit. So let's say they're 26 years old and they contract diabetes and they get sick. All of a sudden, you can't get life insurance, but you had it when you're young. So, full disclaimer, I haven't done it. It's really hard for me to do it. I'm just over the top thinking about getting insurance for my children, but that's a strategy of the super wealthy. So that's something that I want to put out there for everybody.
Gino, you've been reading the Atlas. Now you're saying that the government can change things in the future, and the only place taxes are probably going up in the future. Right? So, right.
Equalization bill. I'm just on that right now. This Atlas Shrugged thing is killing me, dude. But it's true though, right? I'm on page 300 right now. So,
okay, so you picked up 100 from last week. We're making progress.
Yeah, and it's hard. It's hard, dude, because I got to get ready for these podcasts. I got to read other books and stuff. But no, you
don't.
Mm-hmm. I do.
You don't.
Well, let me tell you, what's the biggest thing you got from Atlas Shrugged? What did you like the most from Atlas Shrugged?
I think it taught me to be objective and think more clearly than I did prior to reading the book. And I think that was it at the end of the day. I really did. I think it was really just pounding that objectivism.
You know, it was what's really resonating with me. I'm only like, 1/3 of the way, 1/4 of the way. It's how people in power want to control stuff and keep stuff at the same time, but they want to trickle down to the poor. They don't want to lose their power, but at the same time, they want to share. So how can you do that? And the other thing I think is we need capitalism. We need competition because that drives innovation. Reardon's medal, that drove innovation. For 10 years, no one sees all the hard work that he did. They think he's an overnight success. But for 10 years, he was creating. Then he went out on a limb and took so much risk to do that. And then everyone sees how wealthy and super wealthy is. So, I mean, everyone listening on this podcast, don't think that people are in multifamily, got 1,000 units. It happens overnight. There's a lot of daily activities that lead to weekly, that lead to monthly. Then at the end of the year, you look at it and then go on and on. That's what I love about the book. They don't make these wealthy people just sitting around, unless you're James Taggart who
Acquired it.
acquired it. But his sister is the one who's really running the business, and she's the one who's doing all the work. And the other thing I really like about it is the protagonists, a lot of them, they don't care. They don't have egos. They don't want to be in this limelight and say, hey, I'm the greatest. His sister could care less. For her, happiness in life is really striving and really being just
doing great work.
Yeah, and that's what I think everyone should worry about in life. Leave the ego alone. Once your ego gets involved, it becomes clouded, and you can't think clearly. You're always thinking about what you're supposed to do. If you can do what she did, she's striving. Her sole purpose when she was 12 years old was to run that train and to do a damn good job and be like Nat Taggart, right?
Yeah.
And I think if we can all come to that clarity, I think it's awesome. So I'll give you an update next week's
Perfect.
show. So we're talking taxes right now. Is that what we're doing?
We're talking everything, bro. It's a full circle show here.
Tom, have you read the book yet?
I've not read the book, but I have watched like the movies or whatever a few years back. It's not going to cut it. But just to piggyback on what you said there, we live in America where everybody has the opportunity to go out there and hustle and grind it out and make something of themselves. So and there is no overnight success. So you just have to just grind it out slowly, and eventually it all compounds, like you said, and eventually as long as you stick to it and you're persistent, you'll get there.
I think the other thing that is really resonates with me in the book is the victimhood. And I've always, going through life coaching and all, we can all choose to be victims, right? And it's a great feeling because we all get together, we all huddle. But Dagny was not a victim in the book. Once you become a victim and once you take responsibility of your actions, that's when you start living your life and you start making decisions. And that's, you can listen to Tony Robbins, listen to them all. That's what it's all about. Taking action. Stop being a victim, because stuff happened to you. It happens to all of us. But if you can accept the responsibility, and instead of looking for the problem, looking for the solution. That was the other thing that really resonated with me. You have a problem with taxes? Well, let's look for the solution. I mean, the problem's there, but what's the solution to continue? And the same thing when you're looking at real estate. You're always looking at a deal. There's a lot of problems, and the more problems that a property has, there's more solutions, there's more value that you can create. So that book resonates on so many different levels. So hopefully, by this time next year, I'll be done with the Jake. You're killing me, dude.
You and Thomas.
I'm gonna have to read it too.
Oh man, good. That's great. So kids tax benefits. Do you have any other tips as far as any kind of tax benefits for real estate individuals?
For real estate individuals. So yeah, there's actually something that's recently came out for, called opportunity funds. And it's an individual thing, because if you have a bunch of capital gains, either from real estate or you have stocks and bonds or any capital asset, you can roll over your capital gains into an opportunity fund, defer your taxes. And if you hold in the fund long enough, you can also then lower your taxes. So I think that's going to be a big one as we, over the next few years, as people begin to see, people begin to sell some of their real estate, they'll be able to defer and reduce their capital gains tax using that.
That's awesome. Before we get to the short answers, can you give the listeners your best real estate tip for tax preparation?
The best tip, it's to itemize everything. Itemize all your rehab expenses, because there's something called the de minimis safe harbor. And what the de minimis safe harbor allows you to do, it allows you to deduct tangible personal property on that's under $2,500 per line item on an invoice. So by itemizing your invoice, it allows your CPA to have flexibility to go in there and determine whether or not they want to use that de minimis safe harbor if stuff qualifies, and you can take that deduction immediately. So you don't have to depreciate it, and you don't have to face depreciation recapture tax later on. Also, if it doesn't qualify for the de minimis safe harbor, by having your receipts itemized, your CPA can look at it. Does it qualify for 100% bonus depreciation? If we receive an invoice from a client that says kitchen rehab, for 25 grand, there's not much we could really do. But if once you have that itemized, we can go down there and say, okay, well, you know what, the sink does qualify for this, or, you know, we can write off the refrigerator right away. And we can go ahead and depreciate that vinyl flooring today rather than waiting until, rather than waiting over 5 years or whatever the case is. So that would be the best tip. Just start itemizing all your invoices, all your receipts on your rehab projects.
So we're hitting you with the G-Dad's current book. What have you read this year that you want to recommend to folks?
You know what? I've read, actually found out about this from your guys' podcast, Never Split the Difference by Chris Voss and Tal Raz. After I heard your guys' podcast, I went and read the book twice, and then I listened to the book like 3 times. I mean, I think it was probably arguably my favorite business related book of all time, because it changed my communication structure so much. Like the way I communicate just in general, you know, with the whole entire tactical empathy thing and the mirroring and just all the little things he had in the book, which is such an amazing book. It really did have a huge impact on my life. So that'd be my book of the year.
Gino, you got the gain cranked up on the mic. Give me some late night DJ voice.
Jake, we're not buying that at a five cap adjusted tax basis. It's not happening, right?
Gino, every negotiation starts with no.
And
right?
never split the difference. That's
it's
right.
So true, man. Like the deal we're doing right now, we got no all up and down and slapped around, and we're doing.
And I'm going to tell you the other thing. We asked for a repair credit. The guy flatly said no, and then 2 days later, talked to my partners. Yeah, we can do it. So you don't want to split the difference, right? I always tell the great story with Jake. We had a company come to us. We were doing this. We were listening and reading the book, and we had podcasted them. A company comes to us and says, well, your premiums are going up next year. So Jake calmly, because really it's all about emotions and it's logic. So if you can pull the emotion out of every aspect of your life and just think of it logically, calm down, do a little life coaching, a little woosah. Jake went back to them and said, thanks for getting back to me. We're looking at a couple other providers. We will get back to you. We've gotten prices that are less than yours. They come back to us and give us a quote less
than the original
price that they were giving us.
That was great.
And I mean, it was just like, this stuff really works. What people would normally do is if you're paying $100 a month and they come to you and say, we're going to charge you $140 a month, the average person would say, hey, let's do $120 a month and we'll split the difference. You win, he wins, but that's not what Chris says. Chris says, don't do that. And Jake said, you know what? And they came back and were like, okay, we'll give it to you for $95 a month. So that's just one of the powerful techniques that they use in the book. It's an awesome book.
And it's the power of competition. You need to do the work because most people are too lazy to go out and get the quotes. Go out, get multiple quotes, and show them this is what the market's saying. I'm willing to do the work. Therefore, you need to sharpen your pencil.
And Jake, the other thing is I've learned over the years, and it's hard, but people don't like to hear the word no. And I think just think of it from that perspective. Somebody's not saying no to you. They're just saying no to your offer. Don't take it personally. You're not saying, no, I don't like you. They're just saying, no, I don't like your offer. Can we do something better? And we all do it through our lives. So I think it's a powerful lesson.
All right. What about a habit? Everyone's got, habits that make them successful. What is something you do on a daily or weekly that's led to your success?
Yeah, I really think that the best habits that I've created recently were, realizing that sleep is very important and going to sleep, early, waking up early, and just sticking on a good sleep schedule, and it's really improved, my ability to focus and to be more productive throughout the day. And just tag onto that as well, healthy lifestyle, right? Eating healthy. I started doing these smoothies or whatever over the last few weeks, and it's a habit that I'm quickly building up. And with these health,
you're not putting bananas in them, are you?
I put a little bit of a banana in it. Just a
little sweetness.
We had Jarek Robbins on the show, and he's saying bananas the death food here. I don't know, man. He's don't do bananas in your smoothies.
I don't know. There's so many different people have so many different outlooks on dieting. But I think bananas are safe enough. So yeah, I put a little bit of banana in it. But the smoothies really give you energy throughout the day, and it sustains you. You're energizing. You're putting a lot of healthy food into your body in the beginning of the day. It's really fueling you instead of having just a coffee or something along those lines. Not that there's anything wrong with coffee, but it's just fueling your body with the right stuff. I think that mixed with the sleep has really been the habits that have really added to my success.
I love coffee and I love sleep. It's good stuff, man. What about a value add strategy? You've been doing a few different deals here. Is there something that's really jumped out to you, like a rubs play, or you're billing back for pests, or like exterior fences that you're renting? Anything that you guys are doing that's unique, that's really helped you out, or you just doing the basics?
I mean, we do a lot of the basic stuff, but I think one of the major things, if you can convert units into, like, we could convert a storage shed into basically, a studio. And
Yeah.
I don't know how basic that is or not, but I think that's powerful, because now all of a sudden you have another rent. You're adding another few $100 to your NOI every year. So it's every month, but
And you're adding and value to the overall value of the property, when you're selling. So.
So what we did in our property in Louisville is we started billing back for pest control, $3 a month per tenant. You do 130 units. That's, what is that, $400 a year? It's $400 a month. That's $5,000 a year at a 6 cap. It's almost $80,000 in value that you just added by billing back a $3 pest control. So you need to look at your other income, your ancillary income, because ours makes up between 12 to 15% of our total income, whether it's a move-in fee, whether it's a storage fee, whether it's an application fee, whether it's a pet fee, late fees. You need to be really diligent. There's where the value is. Most mom and pops don't have those other income items. They might have a little bit of rubs. Look at your properties and see where the value is. And if you can extract another 10%, that is huge. Massive.
And that can be the difference between, a $10,000 draw a month or a 20. It's huge. Really big.
Yes. Yeah, so. I agree.
One thing I saw on I think you guys posted on Facebook, which I thought was really interesting, is there was a vending machine that has like soups and stuff in it and sandwiches, and that was like a huge income generator. And I was like, wow, that really makes sense. Put something like that in there. That's a great ancillary income.
Also, a great amenity for your folks. For your residents. So that's a nice one there. What's the best way for people to get a hold of you?
The best way to get a hold of me is probably on LinkedIn. You could just go on LinkedIn, type in Thomas Castelli. I'll be probably the first person that pops up. And then also you could also reach me at therealestatecpa.com. You go ahead and send us a comment or shoot us an email over there at contact@therealestatecpa.com.
So Gino, I got a few questions for you.
Oh gosh, here we go.
Oh, here we go. Now I want to know about the live event this year. You're putting together something great. It's a ways out. Talk to me about this before we get out of here.
Well, I'm going to end the show with some action steps, but Jake's talking about the live event. It's going to be October 19th and 20th, 2019. It's going to be 2 days, the Gaylord Palms in Orlando. We had 400 people this year. Yeah, dude, it's awesome. And the rooms are really inexpensive. You're 10 minutes from Epcot. You're 10 minutes from the Orlando airport. It's easy to fly in Saturday and Sunday. Come a couple days before, stay a couple days later. It's an awesome venue. We're going to be shooting for 600 people. Jake wants me to do 1,000. I've got that limiting belief, but I know we're going to get at least 600 because we had 400 this year. And it's all action. Even there's no upselling. We have nothing to upsell. If you want to become part of the Jake and Gino community, we want you to be part of the community. We're not up there pitching. We're going to be talking life coaching. We're going to be talking about the buy right, the manage right, the finance right. If you want to learn how to manage properties, we have our managed team there. If you want to learn how to finance properties, we're going to have our capital team there. If you want to learn how to buy properties, we're going to teach you how to buy the properties right. I mean, that's what it's all about. It's all about the education. And most importantly, it's about networking. It's about getting face-to-face with professionals, with people who are in the space. It's about getting motivated. It's about staying inspired. It's about being held accountable. All those things come with the live event. And I'm excited. I had a great time. My family's going to be there. So we're going to have our company, Rand Cares, who's going to be grabbing some donations from everybody. But we're going to show you what multifaceted multifamily is at that live event. We're going to have all our parent and sister companies there.
So they have a beach and they have surfing there. Can I get you on a surfboard there and like that little surf thing they got going on?
Dude, it's awesome. It's around the whole thing. My kids, I can't wait, dude. It's gonna be awesome. It's gonna be great.
Thomas, can we get you there or what, man? What's gonna take?
I'd love to be there.
No, can we lock you in? Can we count on you or what?
Yeah.
So Thomas is in. If Thomas is in, and you want to network, because that's what it's all about, guys. It's about networking, get around like-minded people. Maybe Thomas has a deal. Maybe you have a deal. Maybe you come together and you work out the glorious CPA connection, and you make your deals pay you back. So whatever it is, guys, it's going to be awesome. You got to be there. And you're looking for more, jakeandgino.com. You can invest. You can partner up, whatever it's going to be. G-Dad, you said you had a few action steps. Hey.
Yes. Every show we're going to have action steps. As I'm going through the show, the first action step, I think, is If you're serious about creating wealth, if you're serious about getting into real estate and you're doing your own taxes, stop right now. Because anyone who's wealthy or who you aspire to be does not do their taxes. They don't waste countless hours and lose countless deductions. You can go to H&R Block for $150 once a year. If you're that kind of person, then you really shouldn't be listening to this podcast. I'm sorry. I mean, we want to save money on taxes. We're in real estate because there's so many tax benefits. So first thing is listen back to the podcast. Thomas had a lot of questions. Go out and start interviewing CPAs who are in the real estate space. That's the first thing you need to do. The second thing you need to do is start itemizing all your deductions. Start separating your entities. Start having proper accounting for yourself because you want to be able to have clear clarity. We have credit cards for every single entity. We have checking accounts, savings accounts for every single one. We don't commingle funds. We're on Appfolio. We have proper property management software. We have a great team of bookkeepers and accountants. That's what you need to do. Those are the action steps you need to take. The new year's upon us. It's coming upon us. Start the new year off right and make them a real team member. Let them know what you're doing every month. Don't come October and all of a sudden you have nothing on your general ledger and you're running around like a chicken without a head. I used to do that 6 and 7 years ago. That's what causes stress. Make it a monthly routine. At the end of the month, at the beginning of the month, get on the phone with Thomas and say, this is what I got. Let me shoot it over to you. Whether you're using QuickBooks, whether you're using Buildium, whether you're using CozyCo, whether you're using Appfolio, whatever it is, something cloud-based. You can do it over Zoom. It's real easy. And start asking him, what can I do? Because with cost segregation, you can actually create a budget and a capital expenditure account and wait a year to do a roof because maybe you can, you need to have another year left on that roof. So start proactively planning. And that's the problem when people have talked about customer experience and customer journeys. Customer service is reactive. People who do their taxes are reactive. Customer experience is proactive. Like we talked about with Chick-fil-A last week, Jake. Remember, Chick-fil-A is proactive in their customer service because they're outside. When you're online waiting to get takeout food, they're there actually trying to take the order. They're being proactive with you. So be proactive with your taxes because you're going to save a ton of money. And, people think about when they spend money, they're spending money. You're investing money with your accountant because you're going to get that return back tenfold. Make sense?
Two things. Real estate professional, cost segregation. You got to know it. There's two takeaways. You got to know those two things or you're going to be missing out. So, guys, it's been real. Really appreciate everything today. Thomas, thank you for your time.
Thanks again.
Thanks, guys.